Welcome to the Trading Lounge and the Commodities report. There may be a bit of background noise as there's renovations going on. Okay, so starting with the gold chart, and we're looking at the alternative wave count here, and the alternative count is having wave 3 here, an A and a B and a C for wave 4, and then down for wave 1 to here, an A and a B and a C wave for wave 2 here, 5 waves in here for wave 3, an A and a B and a C for wave 4. Wave 4 does pull up a little bit high. It normally pulls back to the wave 4 of 1 less degree, but we see this in commodities a lot, or in leverage products a lot, and it doesn't really overlap wave 1 by that much either. Wave 4 overlapping wave 1 is breaking one of the 3 Elliott rules, but the Elliott rules were designed or built off the Dow Jones and the Dow Jones transports. It is plausible for this market to be pulled down here, and using the trading levels, it's very familiar ground for me when I see a market move into group 1, which is 3, 2 and 1 here. It finds choppy price action because large orders tend to hang out at 1, 2 and 3, and once the 1200 here, or the 2, the pivot within group 1 becomes a retested resistance, then the market is pulled down to 1, and if it's pulled down to 1, then we need to look lower as well, but we won't get there yet. But 1200 as a retested resistance puts a bearish bias on this to the downside here, and this is quite a viable count because when we look at this move up through here, we'll go into a bit more detail here on that one. It's really got it as a nice ABC correction, and that would be confirmed if it takes this low out here on this price point here. Okay, so that 11,167 there. So as it stands at the moment, we're looking at this being an impulse wave up, and we're also looking at this as an impulse wave up. So this would be the support here. We'd need to see the market turn up from this low here, and sure, we can expect a bounce off this 1200 here. We are looking in the next charts, we've just been looking at this market in a bearish bias, but now we're going to look at this in a positive light, and that means that it would need to find support on the 1200 and move up from that point there. Okay, so that's what we've been working with all week. And yesterday we were looking at a 38.2 retracement level for wave 4 there, and then wave 5 to come down. So it can end here after. I won't go through all this structure again, but we've been tracking it down. So this point is a low point here. Now from wave 4 to wave 5, we can be looking at 5 waves for that process here, and it's looking at that sharp move there. It's likely to be a wave 3, so we can get something like that before we see a move up there. We wouldn't turn long on stocks unless we had support on 1230, the top of group 1. So stocks, US gold stocks, Australian gold stocks, Canadian gold stocks, so forth. So we need to see how this plays out here. It's as simple as that. So this little structure to the downside here, let me just drill in. I mean, it does look like a third wave in here. That means a fourth wave and a fifth wave coming down through here. That seems to be quite logical at this point. Just drill in here for a moment. Let me have a little look at this. We've got down for 1 here and back for 2 here. Then we've got 1, 2, 3, 4, 5 to here. 1, 2, 3, 4, 5 to here. I think that's fine. So we can look for here 38.2 retracement level to here. So essentially an A and a B and a C wave back up into this area, and then one more move down through to here. So I wouldn't even bother shorting it going into that 1200. So look, if this 1220 here becomes the support at some stage, then we'll start looking at long trades. And so we're expecting a bounce, but we're not going to get too involved in it, because even if this plays out perfectly here, and tops and bottoms don't always play out perfect on round large numbers either. So until we can actually see a 5-wave structure of something of like this size here, and then an A and a B and a C, then we'll look to go long once we've got that first impulse wave to the upside. So we're way off the mark at the moment. So it's probably, maybe Friday, maybe Monday or something, we'll get some sort of idea on that. And I just want to have a look at silver while we're here as well. And silver, once again, looking at the bearish side of silver, we've got this A and this B and this C here, and this particular level through here, the 16.15, it is a medium level, carries the same weight as the 15 medium level as well, and we can see that that's being breached here at the moment. Will it find support or not? Technically, we can't turn bearish until that low there is taken out. But if this becomes a retested resistance here, then I think we need to sort of move into that side of it. Now, what we had been doing here is looking down at 5 waves down for wave 1 here. So 1, 2, 3, 4, 5 for 1, back for 2. Nice strong third wave here. Fourth wave also pulling up quite high, but still okay. And then the 5th wave down in green here in 5 waves, which is a bit rough as well. And then we were looking for an A and a B and a C wave here. I was looking for just a tad higher here, but to give us the complete structure, but that suffices there, I guess. And once again, we're looking for this to come down. So look, in a bit of a nutshell, when we think about it, we've actually already got 5 waves down here. Do you know what I mean? So then we've got a counter trend here. So it's quite viable to look at this here and just roughly here, down for 1, an A and a B and a C for 2, and down for 3 and 4 and 5. So this is what we'll be looking for over here. So once this completes its 5 waves down here, we'll pay close attention to the structure to the upside here, and we won't short until the 1650, and only if the 1650 becomes a retested resistance, then we'll short using a reference point like this here as such, some low reference point to break through on. So anyway, we'll just sort of watch that. I mean, I'm open and flexible to be trading both sides, of course. We're just looking for a setup, the right signal and the right setup. So we don't have that yet. The copper market, the base metals, and the precious metals can move together. And what we've been looking for here with copper is we've been looking at this whole move down here as a 3rd, 4th, and 5th wave, basically a 3rd wave here, and we've been looking for a wave 4 correction. Now, I have to say I don't have this nailed down at the moment. This whole pattern here, I can get sort of rough sort of estimates of it. But I always figured it would stay to the wave 4 one lesser degree in terms of height, and wouldn't find support on 265. It could trade above 265, but wouldn't find tested support on it. So if it does that, then we know it's going further. But as it stands, it's a wave 4 here, and I was looking to count 5 waves up through to here. Now, in a bit of a nutshell, without going into too close here, this pattern from this high down to this low is corrective. It's only corrective in 3 waves if we get a move above those highs there. So if we get a move above those highs, then we're going to go higher from that point, okay? But if it fades from this point, then this wave 4 will be coming in as this pattern here completed. And the reason I say that too is because when we look at the daily chart on platinum up here, we can see overnight it moved through here. And this has kind of got the same pattern that we've been looking at as well here. So we've got other metals that are moving lower at this point. So gold could possibly move lower. Copper can sort of move. So all these precious metals and base metals can move lower. So it's just important that we're not over trading on the long side in any of these markets at the moment, okay? Just drilling in here a little bit. So yes, this, without making it complicated, this high here, these highs here, if this market moves up through those highs there, then the BHPs of the world will be fine for another short period of time anyway, but we just need to, because as that move from this down here, this move up here, this can be down for 1, back for 2, and working lower from that point there. So we need to get confirmation on that. Of course, if this low here gets taken out, that confirms that we've got a top in place. If we get a move above here, then it's not confirmed for the long side. We're still going up higher. I mean, I originally had this as wave 1 to here, wave 2 to here, wave 3 to here, looking for wave 4 to here, and then wave 5 higher through here. And that's fine. It's just that this came down, overlapping this one here by a fair and reasonable amount. But once again, that wave 4 overlapping wave 1 is very common in derivatives, so we just need to take that with a pinch of salt. Anyway, main point is that we have been moving into the material sector a little bit, but not as much as banking and some of the other discretionary markets. But yeah, we're not getting confirmation in the metals market yet for being committed strongly to those markets. Okay, the oil market has still got a little bit more to rally. Essentially, what we're looking for here is wave 3 low here and back for wave 4, which normally pulls back to the wave 4 of 1 lesser degree, which is here at around 58 odd here, and we're looking at an A wave, a B wave, and a C wave moving up here. So with that in mind, we're looking here. So on the 4-hour chart, we've got an A wave, A, B, C for the B wave, and we're trying to count 5 waves up here. Now it is sort of struggling at this, as it moves up to these old highs. You can see that it got hit here and then recovered, and so it's making an effort to complete these 5 waves. So let's just drill in and have a look at these 5 waves here. And yeah, once again, we've got this wave 4 overlapping this structure here as well. I could put wave 5 here, and then this is part of an ABC correction, but this is only in 3 waves here, so it's likely to be an A wave, a B wave, and a C wave to here. And we're looking at this move up through to here. So from this wave 4 here, if we look at this here, we can see that just on the 4-minute chart here, we can see this strong move here. Okay, so we know that this is like part of a 3rd wave here. So this would be wave 1 into here, wave 2 across here, all of this wave 3, wave 4 pulling back here, and wave 5 can make another high here. So it's really just testing support on 53 here. And this is important because 53, or the number 3, is a top of group 1. So 1, 2, and 3, group 1. Support on top of group 1 separates the order flow from the 50. So that means that orders will start peeling away from the 50 and start looking higher towards 55 once support is confirmed on 53 here. So any long trades here, taking these little reference points out here would be a nice way to do it. Buying in here may see it move back below here, because this is an overshoot pattern here. 2 patterns, the classic and the overshoot. And the overshoot, the distance it goes above the level of 53 is normally the distance it goes below. So it can move back down into this area before it moves up through here. So just be mindful. If it does move below here, that's good news, because next time it gets support on 53 here, you can go long from that point, okay, rather than using this reference point here. But either way, you don't want to miss it. So if that just moves straight up there, then that's the point that would be confirmation that would be going higher from that. Of course, you can get in earlier, but you need to know, what you're doing and how the market's playing out. So I just give the basic, signals there. Alrighty, that's good for that. Now the grains, soybeans, wheat and corn, all looking quite chirpy because the US dollar has made another low. So we talked about this yesterday, the US dollar rather, but because, if I can just draw here, because we made a new low just below this one here, then it's possible for this market to actually move lower now as well. But I still want to get confirmation on this low here just to make sure that it wasn't a spike of some degree. But yes, as it stands, we've got that push down, gave a bit of a push to the commodities to the upside. And once again here, we're looking here for an A wave up here, an A and a B and a C for here, and then the B wave, a C wave up through to here. This should be roughly the same length as wave A here. That's normally how it works. So there'll be some sort of equality here. Maybe it's not always 100%. It might be 61.8%, but it's just things to look for. Now, we're quite sure that this will go higher here because this first move down here as wave A here was in 3 waves. So that kind of confirms that all of this leg here until completed is a corrective move as a ABC wave B here. So we should move up here. But at the same time, we need to be mindful that that I can be wrong, and this pattern that we're looking at on this low here counts as 3 waves here. Now, because it's in 3 waves, it can be labeled as an A wave, a B wave, and a C wave, and then roll down here. Okay, so if we're looking for an impulse wave up, we'll be looking for something like this to the upside. Now, the situation here is that we're happy to go long here, but we do want to see tested support on 1,000, because popping your head up over the level here is not enough. It's not support. It's, yes, it's trading above and it's part of the process and so forth, but it's the breakout's important, retest is more important, and that's what we're waiting for. So drilling into this at the moment, I'm just conservatively putting it as an A and a B and a C rather than wave 1, wave 2 and wave 3 that's going to power off, and it certainly could, but we need to get past this particular structure, and this particular structure is normally 5 waves, 3 waves and 5 waves, or it can be 3 waves, 3 waves and 5 waves. So our main focus is this 5 waves in here completing and then showing us that we've got a corrective pattern. So let me just clarify that a little bit before I go into the other chart here. So exactly what we're looking for here is a 5 wave structure here. Now, in terms of a C wave here, that will give us 5 waves. In terms of we're looking at a much more bullish pattern up here as a wave 3 here, we still look for this 5 waves here. Once these 5 waves are completed, the next thing that we're looking for is an A and a B and a C here. Now, this A, B, C here would give us another 5 up. So this is really important here. If we start to get 1, 2, that 3 wave ABC, if that turns into 5 waves here, then we know that we're going to be moving further down, and then it was just an A and a B and a C wave here and failing from that point. So it's very important that we go through this process here of the ABC here. And once we've got our high here, wherever that high may be, that will be our reference point. So we can watch the correction of that point, retest the 1,000. It may come below. If it comes below, then when it comes up on support here, we can gain a small position there, and I'd prefer that. But if it just comes down and retests it and bounces back straight up through here, then we'll take that reference high out to be long at that point. Okay, the wheat market. We're long here anyway at 534 using the weekly robo method. Yes, it's true that that I should move the stop up under this low here, but I just don't want to do that just yet. I just want to get more of a picture of what's actually happening. I don't want to get in and get stopped out. So we'll look to add, if this market moves up, we will look to add on new highs. We'll look to add 2 or 3 or 4 times depending on what the US dollar is doing and a few other things. So with this market here, once again, the move up through to here, I'm calling an A wave and a B wave and a C wave that can fail up through to here, but at the same time it has the ability to work higher in an impulse wave as long as that low stays in place. Long as we're getting these higher lows, then this structure could turn into up for 1, back for 2 here, then a smaller up for 1 and back for 2. So I'm not wiping it out just yet, and the other reason we're going long here, or being long, is because we're above the 500 here, and yes, this can certainly just be a bounce off here, and after all, we've been counting all the way down through to here. So we have to, as a turn in the market, we have to sort of, we want to see a nice impulse wave, and the other way to count this too is that we could actually have 5 waves up here. So wave 1, wave 2, wave 3, which wasn't that long. Wave 4 is complicated, so that's suitable. And then wave 5 up to here. So then an A and a B and a C, and then up through to here. So that's why I want to keep our stops out of the way for the time being until we can confirm what we have. And at the same time, we need to build in small positions to the upside. At the moment, with this market anyway, this 530 here is going to be important. It's 30, so number 3, it's the top of group 1, so 10, 20, and 30. That's what we'd be looking for there. Tested support on that 30, separates it from the 500, and that's exactly what we need. The corn market, same thing again. We're long at 391 and the stop is down here. Yes, I could move the stop up to here, but I just don't want to do that yet. And having that wide distance there makes you get smaller position sizing as well. And bear in mind that we'll be looking to add to the position as it moves higher. However, the main problem is that we're under the 400 here. So we're really under the closest largest number, and it's not the done thing to, well, in my mind, to go long there unless you've got good control over what's happening. So we've got reasonable control over what's happening in ways that, first of all, this particular market, out of all the grains, retraced the less here, and it's also displaying a nice impulse wave to the upside here. So up for 1, back for 2. So we should work higher from this point here, and on this 8-hour chart, we can move in here to the 4-hour chart, and this must have been on there from yesterday, but this is basically what we're looking for. Wave 2 in play, wave 3 up. We're looking for 5 waves up here. Yes, wave 3 should be longer than wave 1 here, but we are dealing with 400 here, which is a medium level, so we have to work through that. So if you haven't got a position in here, you can get a position in here, but we'll be looking to add above the 400 there. So that's all looking good. We're getting good volume coming in here as well, so it's all looking chirpy on this one. Now the coffee market. So we could be very close to having a low in. I would like to see it sort of bounce off the 150 if possible. However, just to go over this a little bit to show you where we are, where I think we are in 1, 2, 3, 4, and then 5 waves down here for wave 5. So wave 1, 2, 3, A, B, C for the 4th and down for the 5th here. So that's the A, the B, and the C here, and down for the 5th here. So we're focused on this 5th wave. We're also focused on this last leg here as well. So with that in mind, just drilling in here. So from wave 4 on the 4-hour chart, we've got 1 and 2 and 3, then an A and a B and a C wave for 4. And then we're looking for 5 waves down. Now the 5 waves down were a little bit tricky because once again we were counting this down as 1 and 2 here and 3 here and 4 here, but 4 rallied a bit higher here, but we stayed with it as being a wave 4, and that turned out to be correct, and we're looking for wave 5 to come down. So it's fallen down pretty quickly here, but at the same time we should be pretty close to a low, if not a low in place. So we're looking at it from this wave 4, 1, 2, 3, 4, and 5. So that's all good. So what we're really looking for now is we're looking for 5 waves in this structure here. So with that in mind, drilling into here. Now, if I put this to this high here, then it's quite clear that we've got 5 waves down here, the 1, the 2, 3, the 4, and the 5, and we've finished, and we can go up from that point. The other point that I've got here that needs to be discussed is that we could be down for 1 here, back for 2 here. All of this is the 3rd wave. 4th wave pulling back to 158, the 38.2 retracement level roughly, and then wave 5 down here and then up here. That I don't know. So I think what we could do is look at 160. If we get support on 160, we can go along from there. Yes, you could do it from 158, but make sure that you got tested support on 158 and put in a small position with the view of adding on to 160, and then on top of group 1, which is 163, and then 165. Because we'll be going into group 2 at that stage there. So we are very close to a low here. I just don't know how to distinguish between this one, this 5 wave structure coming down through here. So as a safety net, the 160 above is good to go. The cotton market, here. We're looking for 5 waves up to 65, which is a medium level, then a reaction in 3, and then higher from that point. If we get 5 waves here, which we are, then we'll get another 5 waves over here. That's just the good thing about using Elliott, because if you get 5 waves here in the opposite direction of the market flow here, and this is the market flow here, we know that we're getting a turning point because we can see that it was very fast here, and then it's just like a ball bouncing, you know, getting lower and lower and lower and slowing and all the rest of it. So we have got that nice strong impulse wave here, so we will get another one over here. So that's all tradable, and you may already be long here from the 60 and upwards, and that's fine. And I have adjusted the wave count a little bit in terms of up for 1, back for 2, all the way up for 3 here, back for 4, and then looking for wave 5 up here. In wave 5, we're looking for 5 waves, 1, 2, 3, 4, 5, and that would be in here as 1 and 2 and 3 and 4 and 5. And just drilling into that a little bit further here, it would look something like this here. So wave 4 being in play here, 1, 2, 3, 4, and 5 up to here. So yeah, taking profit up here and re-entering on top of 65 is fine. You know, you have to expect some type of corrective pattern in this range here from 63 to 66.50. The cocoa market, okay, we've got London here, and London just on the 1 hour chart here. Our main point here is looking for 5 waves up here. And I sort of tossed and turned with it all a little bit and so forth. But basically this, every trend's got a beginning, a middle, and an end. So this is the beginning here. This is the building process, right? This gap right in the middle here is the third of the third. So that's the most powerful point in the structure when people recognize that it's going up and most volume comes in it. And the top of the ending of the structure is kind of like a reverse image of the building of the trend. So you got the beginning, you got the middle, and this is the ending here. And you can see that, you know, this was sort of chirpy here and strong here, and then this is sort of getting tired here, isn't it? So yes, it's true that the structure here can dictate a higher move here as such here, but at some point we'd be looking for this, and this is actually what we're waiting for here for our long trade. So we want to see the top of this trend finish here, correct it, rebalance that trend in time and price, and then move up from that point there. This is London. The US market is much the same pattern, exactly the same pattern to the upside. It's just that it's working with a major trading level number 3, and it hasn't got there yet. This one here is working with this level now. So I think that's just a very, I mean, it's a sort of, it's just an important point where this one has got the 3 up here. Okay. So this is a 2 hour chart rather than the hour chart you just seen. So it's the same pattern up through here. It hasn't moved lately of the last few days because, well, the holiday yesterday and not much volume in there today, but still looking for this completion to the upside, and then the A, the B, and the C wave here. You know, once we've once we've got this here, then we can look to once we've got this wave 2 in place here, I'll feel much happier. You know, I mean, yeah. Alrighty, that's it. Thanks for tuning in.